Hi friends, this is Kamal Shah from Swaycharts Consultancy Private Limited. Swaycharts is into training on technical analysis, and we had started with the video series on introduction to technical analysis. In the first video, we understood what is a primary market, what is a secondary market, and we talked about briefly about ways to invest in market, and we saw about how to invest or what is a cash segment or equities, and we also saw derivatives where we had discussed about futures mainly, and we talked about the advantage of derivatives. In this video we are going to speak about stock market jargons, right? So there are few jargons which you may have heard, and I'm just going to clarify on each of them today, right? So the first jargon that I'm going to say about is there are few names of these exchanges which have been abbreviated, so we call them as NSC. This is nothing but abbreviation for National Stock Exchange. So this is one of the exchange, as we talked about the secondary market, right? And the other exchange is BSE, which is nothing but Bombay Stock Exchange, right? Now let's see the indexes that we need to understand with respect to each of this exchange. So Nifty is the index for NSC, so it is what we call as National Index 50 stocks. Okay, so that's how the name is, Nifty 50. Okay, so this is what it is, National Index of 50 stocks. This is basically the benchmark index of NSC. So this is the benchmark index of NSE, and this constituents of 50 top companies, right? And then let's understand the benchmark index of Bombay Stock Exchange, which is Sensex, which is also sensitive index is the full form of it, and it is a constituent of 30 stocks, right? So top 30 stocks, when combined, they give you this index. Then let's speak about something called as SEBI. This is nothing but Security Exchange Bureau of Investigation. So it is nothing but Security Exchange Bureau of Investigation. So this is basically the regulatory body for the exchange and investors, right? So they are actually responsible for any regulations that has to be done between the companies which are listed onto the exchange, for the exchange themselves, as along with the investors in the exchange. So these are the few of the terminologies that we should be aware of, or the stock market related jargons. Then we move on to few stock specific jargons, what we call as large cap. So you must have heard that people speak a lot about this words large cap. Large cap nothing but it is the company which has got market capitalization of greater than $10 billion. Okay, so this is that particular company. Okay, then comes mid cap. Now mid cap is again depending on the market capitalization. So company whose market capitalization Okay, so I'm going to write now MC is less than $10 billion but greater than $2 billion. Okay, and then comes small cap. Now this are company with market capitalization of less than $2 billion. Okay, now we need to understand one more thing with respect to this three types of market capitalized companies. Large cap companies are basically less riskier. Okay, so then let me just write here. Okay, large cap companies are less riskier compared to the other two. Now mid cap companies is riskier with respect to large cap, but safer with respect to small cap. Okay, and this is the most riskiest one. Okay, and then let me have some more space somewhere. Okay, so this is right now what we discussed was on NSE, BSE, then index of each of the exchange. Then we discussed about large cap, mid cap and small cap. And now what we are going to talk is purely related to the trades, right? So now if I tell you that I am long on a company, say I'm long on Reliance. Okay, so if I say long, this is equal to if I say I have bought Reliance or I'm in buy position. Okay, so this is going to be the same thing as I am bullish on Reliance. Okay, so if I say the word long, buy or bullish, this means the same in stock market, because when you are bullish you are expecting the price to go higher, and that's the reason why the thing that you will do in stock market is saying that I'll be going long on it. Long again means you are going to buy it first and then you will sell when the price rises. So that is the reason why going long is equivalent to buying that particular equity, and it also means that your view on that particular stock is bullish. So these are the three words which has the same meaning. Now let's see with respect to the opposite side of it, which is say short. So if I say short Reliance, means I am actually selling it first. So I am a seller for it first, which is also equivalent to saying that I am bearish on the stock. Okay, so I am bearish on Reliance, right? So that is again the three words which has the same meaning. Short means that I am going to sell it, and it means that my view is bearish. So this again means one and the same thing, right? So if I say that if we need to go long onto something, or when I say we have to go short on something, you should be able to identify that whether we are going to buy it or we are going to sell it. And if I say that my view is bearish, you should automatically understand that we are talking about selling it first and then buying it later at a lower price. And if I say I'm bullish on something, that means I'm going to buy that particular stock first and then sell it as it rises, right? So that is how we'll see on this key words. Then the other few jargons that comes across us is something called as circuit. Okay, it's not the circuit we know about Munna Bhai. Okay, this is normal circuits that we have in stock market. So circuits or circuit filters, as we very well know them, are nothing but there are a cap on each of the stock that can move in a day. So it is the limiting a day's move of a stock. So the max limit is 20%, right? So what we say there as upper circuit and lower circuit. So upper circuit is when I am plus by 20% in a day. So say suppose if something has been traded at 100, okay, and in the day I reach 120, which means I am 20% above my previous closing price. So on this particular day the trading will be halted. The trading halts, so that no further price hike will happen. So that is what the upper circuit means. But if the price comes below 120, the trading can resume, right? So understand one thing, that when the circuit hits and it is an upper circuit, means only buyers and no sellers, okay. And lower circuit is something again what we say as minus 20%. Okay, so say suppose again with the same example, it was 100 the previous day and today during the trading it went till 80. So then at 80 I am lower by 20% and the trading will halt. Again if it rises above 80, the trading can resume, but normally in a lower circuit we have only sellers and no buyers. So I would like to put a disclaimer on what we just understood on circuit. The disclaimer is that this circuit filters are only applied to stocks in cash segment. They are not applied to derivatives. So the stocks which are traded in derivatives will not have this circuit filter. For example, Reliance, which is being traded into this derivatives market in futures and options, will not have this circuit filters even if you are trading them in cash, right? So it can have a rise and fall of 30 to 40% on a single day. That is possible for the stocks which are traded into derivatives market. Hope this video was helpful to you. Like our channel Sway Charts on YouTube for more and more videos. Thank you all.